Hello guys, my name's Colin and this is Colin Talks Crypto. The Bitcoin and cryptocurrency price has been very exciting lately, and in light of that, I want to do a bull run checkup where we're going to touch upon a ton of different metrics and we're going to analyze where we are in the grand scheme of things in relation to where we've come from at the bottom and how high and how far we may have yet to go. Thanks for joining me. So today we have a Bitcoin price of $22,577. Ethereum is at $640 and so on. It is December 18th, 2020. Things are getting very exciting very quickly. You know, some of you have talked about the concept of lengthening cycles in bull runs. And that's basically the idea that every subsequent bull run takes longer and longer to reach its new peak. Well, here's an image from Plan B, and I highly recommend you follow him on Twitter, and he makes a ton of great informational charts on Bitcoin and bull runs. And in this chart here, he fairly conclusively proves that we're not done with the bull run yet, so we'll take it in stride, that theory of both lengthening cycles and diminishing returns may not be true, at least so far. So I want to walk you through this chart here. So there's three lines on this chart. There's a dark blue line right here, there's a light blue line, and there's a red line, and they go in that sequence. So the oldest time frame is the dark blue line. So you can see it's actually three cycles overlaid on top of each other, and every time there's a halving event, that is denoted by the left-hand line here. So this chart slices the cycles by the halving event, and it starts it. The clock starts at 0 when a halving event occurs. And with that metric, it's really clever. We can then time it based on how many months after each halving does each bull run compare to the performance of the prior bull run. So what does this tell us? It tells us that today, where this red line ends here, we are actually higher in price as far as 8 months after the halving compared to the last bull run. We're actually doing better than the last bull run. We're priced higher. And at this rate, we're actually moving quicker. We're actually potentially going to peak out more quickly. And so this was the $1,150 price peak of around 2013. And this was the $20,000 price peak around the end of 2017. So the question is where are we going to end up? Well, one thing looks fairly certain at this stage of the game. It does not look like we're going to take an extended amount of time to top out with our bull run. It looks like, if anything, we may actually do it a little quicker than last time. So that goes directly against those people who said maybe we have lengthening cycles or diminishing returns. It's maybe too early to talk about the diminishing returns. I don't know if we will beat this peak here as far as vertically on the chart, but I do feel that we are making moves more quickly, and it's very probable that we will peak out in less time from the halving than we saw in the last bull run. So in 2017, it took about 17 or 18 months for us to reach that $20,000 high after the bull run peak. In 2013, it took us only about 13 months after the halving to reach that bull run peak. So right now, it's looking like we're going to top out somewhere in the range of between 13 and 18 months after the halving event that we just had in May of 2020. So let's take the average of that. Let's say it's 16 months, and let's add that to May 2020. You get September of 2021 approximately. I would say anywhere within 3 months in any direction of that is pretty likely. So the end of 2021, as we've been saying. So I really like this metric. It does not look like we're going to see lengthening cycles. I get that comment a lot in my YouTube videos, like people expect this to be a bull run peak in 2024, 2023. Some ridiculous ones say 2025. I really don't see it. I think that's really missing the mark. And this chart is at least a data point, a data set that actually backs up why that's not looking likely. So any of your friends who tell you that this bull run is going to take longer than normal, show them this chart. It doesn't look like that's the case. All right, moving on. A few videos ago, I showed you this chart. This is the total assets by market cap, and this is just a fun chart. And at that time, Bitcoin was ranked 21 of all assets, 21st place of all assets that are listed on this. And at the top, we have Apple, Microsoft, Amazon, etc. And I did a video a few weeks later, and then Bitcoin had climbed to 17th place. We'll take a look at it right now, guys. Ranked 12th. And this is going to continue to climb. I think that my prediction is actually that Bitcoin will be in the top, maybe the first place at the time the bull run peak ends. And so Bitcoin would then have a total market cap in the trillions of dollars. And I know that's far-fetched for some of you to believe. I wholeheartedly believe that. And if we do some quick math here, let's say that we have a $100,000 price. And I've stated this many times. I think that $100,000 is a very, very puny, minuscule target. I think we're going to blow past that. So this is extremely conservative in my mind. And if we take that price target, that very conservative price target, and we multiply it times the number of Bitcoin in circulation, we get $2.1 trillion. So it's not far-fetched at all. If you take a look here, Apple right now is at $2.1 trillion. So with a measly $100,000 Bitcoin price, we're already going to match the total market cap of the number one asset, which is Apple. Now let's take $200,000, which I think is a lot more realistic for the peak price of Bitcoin this bull run, and let's multiply that times the total supply of Bitcoin. And we get a $4.2 trillion market cap. I think that we're going to be seeing a $4 trillion market cap this time around, guys, and that's going to blow Apple out of the water. That's going to be twice as high of a market cap as Apple. It's going to be 3 times as high as Google. So guys, you can mark that down as one of my predictions. I think that we're not only going to see a $1 or $2 trillion Bitcoin market cap, I think we're going to see in excess of potentially $4 trillion. It's simple math. And here's another great chart. This is Plan B's stock to flow chart. And when in doubt, zoom out. And let's take a look here, because it looked like we were off track for a little bit from this light blue line. You can see these colored dots are roughly following this light blue line, but we suddenly shot back up and we're back on target. It's not to say that we won't have a correction, but so far stock to flow is holding true for this bull run. And if that's the case, we have some pretty nice prices to be seen here at the top, over 100,000, because as you can see here, every time the Bitcoin price peaks out, it actually shoots way above this blue line. So here's the blue line at just about $100,000, and way above that would put it maybe 200,000, maybe a little more. Again, $4 trillion, $200,000 price estimate. Next chart here. This is just a fun one for all you guys who compare the price of Bitcoin and gold, and Bitcoin and the stock market. And this is really cool because it allows us to see the percentage gain at any point in time and how its performance has been from that point. So let's take a look here. I'm going to just give you a quick orientation. The white line is the Bitcoin price. The orange line is the price of gold, which today is $1,890. The blue line is the S&P 500. So this is representative of the stock market. So you can see that at least as of today, Bitcoin is blowing past those. Currently, now it depends on when you start this chart. So let's slide it over. Let's say from the start of the year 2000. Right now, the chart has started from the year 2000, and we have seen a 206% gain on the price of Bitcoin from the start of this year. For gold, we've seen only 25%, and for the stock market, we've seen a 14% or 15%. And you can note that the stock market has been artificially pumped and inflated, so that's not even real money. I would argue that Bitcoin is absorbing real money and taking it on as its own. So it's like a giant black hole sucking up all that fake money, all that purchasing power that's just being diluted. Bitcoin is sucking that in. And so if you buy Bitcoin, you're on the right side of that wealth transfer. The wrong side of the wealth transfer is on the fake money, the fiat dollar side. Okay, so now let's slide this chart over to 2019. So now all the prices are relative to the start of 2019. What do we have? We have Bitcoin up 472% since the beginning of 2019. And we have gold and the stock market, I can't quite see the difference here, they're roughly 48% up. So 472% versus 48%. And you wonder why I get a little excited when people like Peter Schiff continually harp on Bitcoin and call it a bubble, yet it's outperforming gold on almost every time span. So it's very hypocritical, and I think that it just shows a failure to adapt to the future of money. Gold is great. There's nothing wrong with gold. Gold is awesome. And if Bitcoin wasn't around, I would be hoarding gold right now. But there is a better alternative now. It is Bitcoin and cryptocurrencies. So to stay on the gold bandwagon in light of this tremendous new opportunity and innovation is really selling yourself short, and it's really living in the past. For these gold bugs who don't get it, like, take a look at what you're looking at here. It's a truly transformative technology. This is the equivalent of Apple or Microsoft stock in the early 90s. This is the equivalent of the dot-coms in the 2000 when they exploded. And it's not to say that there's not massive corrections, but the general trend is up because this is an innovative, disruptive technology that's not going away. It's only a bubble if it's fake and it's going away. This is truly offering a utility, a service, and a increased livelihood for many people on Earth who have governments that continually rape and abuse their money, and they lose purchasing power, and the government essentially steals from them. So Bitcoin is that way out. Anyone who doesn't see this is just late to the game, and they're going to be those guys jumping on board way late in the cycle. Peter Schiff will probably be one of those guys. He's already been wrong for about 7 years or maybe even 10 years now. And so I hope that he figures it out here because the chart is not lying. Bitcoin is up 472% in the last 2 years. Okay, that's all I'm going to harp on that. Here's another fun one. This is a trading view chart. So this shows the last $20,000 Bitcoin price peak. And this user created this chart observing a massive, major resistance line that turned into support. Well, here's what happened. If we click on the up-to-date button, boom. Look how much this blasted through that. Resistance became support, and we have not looked back since. I mean, that's the most insane, crazy breaking of resistance I've ever seen right there. Here's another good one. This is the golden cross ratio. Basically, it says that from the bottom of any market until the halving is about 51%. And so you can determine when the next bull run peak will occur with the remaining 49% from the halving to the peak. And that's what these light green and dark green boxes show in turn, 51%, 49%. And as you can see, we're spot on here. We're right in the middle of this green box. It shows that we have until 2021 before we peak out. And we're about halfway through. So it looks like we're right on track with this chart. And here's another chart I like to use as part of my tool set for determining when we're going to reach the peak. Now, a couple of videos ago, I think we're around 30% between the green line and the red line. Now it looks like we're about 51%. We are 55% even. We've just crossed over that middle point. And what this chart is showing here is a 2-year average, a 2-year moving average, and that's the green line. The red line is that 2-year moving average multiplied times 5. That creates a price channel. And historically, this has proven correct in determining the times to sell when the chart goes into the red zone above that red line, and times to buy when the chart goes into the green zone below that green line. So right now, we're right smack dab between the red and the green line, maybe a little above the halfway point. So this shows us that we're not near the top yet. We have a long ways to go. It shows us it's not a buying opportunity. It's not a selling opportunity. It's really just a holding opportunity. And here's another one I like a lot. I found this recently. This is the Trololo trend line. And essentially, we take this lower band, this very fine dotted line here, and this line touches so many points on this logarithmic scale of the Bitcoin price. So we take this line in comparison to the average price, the trend line over this entire Bitcoin price chart, and that's the red line. So we take the distance between the lower band and the trend line, the red line, and we take an equidistance from that up, and we determine the upper bound of that price chart. Very similar to the last one, the 2-year moving average, but this one's not using a 2-year moving average. This is using a lower band trend line that touches almost every single point that Bitcoin has ever reached when it hits its absolute bottoms. So this chart is again showing us we're just slightly above halfway. We're just slightly above 50% of that middle price range trend line. We're not in a buying range. We're not in a selling range. We're in a holding range. And when it does finally approach and surpass this upper bound heavy dotted line here, that is when we should be ready to sell. It looks like historically we shouldn't even sell right at that moment. We should be waiting a little bit beyond that, maybe another 20% higher than that, and then start to pull the trigger. So this is another very useful chart. Historically speaking, it just has been accurate. Here's another one. I may go into this more in the future. Shout out to Ivan on Tech for actually bringing this to my attention. This is the NUPL chart, NUPL. Show me your NUPLs. And so what does this show? This chart shows that if all Bitcoins were sold today, how much would investors stand to gain or lose? That's all this chart is showing. And it gets really technical and there's formulas involved, but I'm going to keep it simple as that. If all Bitcoins today were sold, how much would investors stand to gain or lose? And that is what this chart is showing. And so the different colors show the different ranges. So if you take the red range, that is capitulation. That's the actual very bottoms of the bull run cycles. Then you have the orange colored area, and that's hope when you're on your way up, and it's fear when you're on your way down. Then in the yellow range, we have optimism on the way up, and we have anxiety on the way down. And then we have the green colored belief and denial on the way up, on the way down. And then at the very top, we have blue, which is euphoria and greed. You can see the scale down here at the bottom. And the euphoria and the greed would be historically the time you should have sold on every past bull run. Now, I do want to make note that it looks like the euphoria greed seems to be decreasing slightly on this particular chart. As you can note back here in 2011, in the euphoria greed stage, it's quite a bit higher than it is in the 2013 peak. And when you go over here to the 2017 peak, which is the $20,000 Bitcoin price, you can see that the euphoria blue range is quite a bit less than these previous ones. It's almost like you could draw a line through these, and I'll do it on the screen right now. And this line would then portend that basically when we just about touch this, or maybe just go a pixel or two above this dotted line right here, that would be when we should start to sell our Bitcoins. So this is another useful graph in my opinion, the NUPL graph. Show me your NUPLs. And moving on to another graph. This is the Puell Multiple, and I've not seen anyone share this one. And I'm going to do this chart a little bit reverse engineered. I don't know anything about the formula behind this one. All I know is that historically it has been correct. So it's very likely and probable that it could be correct again, just based on its historical significance over the past 10 years. So you can see right here, in 2013, this was the $250 Bitcoin price peak. The price shot into this red band, indicating time to sell. Then a little bit later in the 2013 December price peak of $1,150, again, we have the Bitcoin price shooting into this red band, indicating time to sell. Both of those would have been tremendous times to sell because there's a massive correction following that. And notice it doesn't falsely call any other time to sell in between then, because the orange line does not go up into that red band up here until the 2017 $20,000 Bitcoin price, at which point the orange Puell multiple line shoots up into this red band again. And so if history does repeat, which it has for the past 10 years, it looks like the Puell multiple line will reach into this red band once again, maybe not quite as high because you can see it's dropping down a little bit here, but it'll be in this red band when it gets close to time to sell. So another graph I'll just be paying attention to here. And lastly, I'll just leave you with this. The reserve currency status of any country does not last forever. And so here we show you Portugal, Spain, Netherlands, France, Britain, US, and enter Bitcoin in 2009 when Satoshi created Bitcoin, created financial sovereignty and freedom for mankind. Hopefully Bitcoin lasts much longer than these previous fiat currencies because Bitcoin has one thing that all of these don't have. It's not in government we trust, it's in math we trust. And that is a huge difference. And that is why this is not just some small innovation. This is the first time in hundreds of years, in fact, ever in mankind's history, that we have seen a currency created and secured by math alone and not by governments or centralized control. I'll leave you with that mic drop. Have a great day, guys.